Well, beginning of a new year, first cobalt had to become Electra. We've got our cobalt plant funded and under construction. And as we look to 2022, it's moving our way through that construction process to commissioning and cash flow, all the while advancing the other three phases of the project, which is going to be recycling, nickel processing, and ultimately precursor production to be the first battery park here in North America.
Trent, good to see you. I haven't seen you since August. I did speak to one of your colleagues, Michael, back in, I guess, was it November-ish? Kind of great addition to the team. Is that something you're focused on at the moment? You're building up the team?
Yeah, we have to. We're pretty lean. When I compare ourselves to some of our peers out there, we're in the market right now for another vice president, growth and sustainability. So I need ESG in the boardroom, or in the C-suite rather, and the boardroom. But this individual is going to be focused on the growth of our battery park initiative. And then under him or her will be a sustainability lead as well to help us with our transparency initiatives, our carbon footprint. And of course, the site level team has probably doubled, and they'll double again over the next year.
Are those things important for the operation, or are they important just for optics? I mean, how do you view this? Because you've chosen to operate in a space, the battery space, and there's a lot of greenwashing going on. I mean, how do you view those appointments, really?
Yeah, when I look at some of the proclamations and whether it be on the fund side or whether it be on the corporate side, I get a little frustrated because the metrics are vague. Here we are. We've got almost a zero carbon footprint facility, right? It's a hydromet facility, hydroelectric power in Canada. We're not in a water stressed environment. We've got everything going for us. We're not making these grand statements because we don't really know what they mean yet. This year, we've got to start on a few initiatives. Clearly, if we're going to be delivering to the auto supply market, the downstream market, we've got to certify our supply chain because we're going to start with cobalt. So that's easy to do, if you will, to trace the product. Carbon footprinting, we're going to take a stand this year. So I think it's important. But the industry is still pretty mature. It's still a bit of a Wild West.
Yeah, I kind of agree with that. I don't think there's a kind of established metric in place to sort of judge yourself by, for sure. Well, Trent, I wanted to catch up because I think you had a good year last year. You kind of take this the right way, sort of punching above your weight in the sense that you're playing with the big boys without necessarily having the team to, deliver that. Right. But that's changing, and I saw that with Michael and some of the conversation we had there, and it has changed obviously with recent announcement with Glencore, 5-year cobalt tolling contract. So why don't we kick off and maybe talk about some of those moving parts which are solidifying or confirming your ability to operate and talk to people like this. So what was the Glencore deal?
Yeah, well, I mean, the Glencore deal specifically on the cobalt plant, because we had two streams going on last year. One was execution on the plant the cobalt strategy that everybody knew about. And then behind the scenes was this formulation of a broader strategy, which I really couldn't talk about until we had that initial step de-risked. The Glencore deal is the first of a few contracts we're going to have out there. We're going to be producing 5,000 tons of cobalt in a sulfate product starting at the end of this year. So into 2023, we'll ramp up. Glencore is going to be tolling 1,000 of those 5,000 tons through us. And the opportunity there for us to work with the world's largest cobalt miner, they are now on the downstream. They're now facing the battery market with us. And jointly, we're going to be able to market the Electra product in Canada as the greenest, or one of the greenest, certainly, cobalt products in the world, and try to get that premium in the market that we believe exists with the Umicore's Kokkola facility. And so there was a strategic reason we want to do that. The rest of our product is going to be placed with the downstream OEMs. But I think the Glencore as a first step will help us because they've already got the global book. They've got the relationships, and we should yield some benefits for the rest of our book on that deal.
Okay, and talk about the other 4,000 bucks. What's happening with that?
Yeah, we're close,
sorry,
I guess.
4,000 tons, I should say.
4,000 tons, yeah. I mean, it's 5,000 in aggregate. I mean, ultimately, we'll be upsizing. We made a decision to upsize the plant to 6,500. So that gives you, I guess, an indication of our confidence in the book and in the demand for cobalt sulfate in North America and beyond. I'd say, look, I would hope it's Q1, but it's hard to predict because the OEMs really control the timing on these things. But Michael Insulin out of Europe has been leading the charge. We could sell all of our product. Truthfully, we sell all of our product, tomorrow to metal traders who will then just take it and sell it on themselves. I think our shareholders and my board want us to enter into direct relationships, be part of that supply chain. And so I think we're slowly moving. We've got proposals out. We've got legal reviews ongoing. It's just a question of when we can have a meeting of the minds here to announce at least one OEM contract here in the first half and hopefully a lot sooner.
Right, and obviously, we're obviously reading about the base shelf offering up to $70 million bucks now, and in fact, when we talked in August, you just raised some money as well. So the money's not hard to come by. It partly because of the thematic, partly because of location, where you're based, and the proximity to a lot of the American battery cell, operators in terms of that arena that they operate. So money's not the problem for you. Why was it important to get Glencore on board when you could, with a contract, when you could just sell into the market?
I think, money, you're right. I mean, money, 2 years ago, it was hard to raise $1 million. And now we closed off the year having raised 51, if I recall. And so, putting a base shelf on there, it's just prudent, right? Fiscal management. We're spending, look on that, by the way, Matt, we're spending about 1.3 million a week right now, if I were to average out our spend in the refinery. So, over $5 million a month being invested in the cobalt plant. Yes, we've got, 61 million CAD in treasury, another 10 million from government coming. So we're in good shape, but our ambitions are going to take us beyond that. But this is the year we grow up as a company. And so we've gone from raising 1 million to, needing to raise a lot more, but you got to time that obviously with the market. And so Glencore is part of a broader strategy. We are buying, currently we're buying a big portion of our feedstock from Glencore IXM. In aggregate, the two of those are 4,500 tons of the cobalt units coming in our door. So to partner with them on the other side, I think there's some mutual interest there. Recall that when we started the strategy 2 years ago, we were kind of tied at the hip with Glencore, right? We were going to be tolling with them on a 100% basis. They gave us the initial $5 million US funding loan to do our feasibility study. And then from that, we were able to, extricate ourselves. It was a mutually agreed arrangement where we would be market facing. With the market strengthening, I think we see an opportunity to align ourselves a little bit, but largely preserve our independence. Glencore, we don't owe any money to them anymore. They don't own any shares. This is a strictly commercial relationship with some of the best cobalt traders in the worord.
Yeah, but that's why I was asking the question, because having been sort of entirely dependent on them, managed to extricate yourself from that relationship. You've then chosen to go back in with these guys, but those are separate and mutually exclusive situations, right? Yeah,
we're not dependent on them. I guess they have been good partners. They're tough. I've dealt with them several times in my career. As have my board. We had a lot of ex-Falconbridge, ex-Glencore people within our team. So we do have relationships we can leverage. But look, for them, this is all about business. They happen to be 2 hours away from us, right? Sudbury is. And so when we start looking at reagents or off-spec material or product, there could be some synergies there down the road. They're in the recycling game. We're getting in the recycling game. So there are opportunities, and you just got to recognize their proximity to us. And on the on the sustainability side, when we look at sourcing and certifying our supply chain, a lot of the standards that are there, whether it be Cobalt Institute, OECD guidelines. I mean, this is Glencore, Tesla, VW, that have come together and agreed on the standards. And so we're going to get some support there as well, I would think.
Right. Okay. So look, I want to say this now. Please go and watch the interview I did with Michael back in November, and go and watch the conversations that I've had previously with Trent. Okay. I don't want to go over what have you got, what's in the portfolio, etc. What I want to talk about is something that you said earlier. Okay. You said it's now time to grow up, and I agree with you. But it's not just about growing up; it's about growing. You got to start demonstrating scale to this opportunity and a bit of focus about how you go about doing it, because revenue obviously will come when the plant is online. But you mentioned nickel, you mentioned the precursor, you mentioned the battery recycling, okay, and you're packaging it together in this battery park, as you labeled it. How are you putting that together? What are we going to be seeing from you this year where you grow up?
Okay, yeah. So when you look, if I may, if you look at the backdrop in terms of the timing of the opportunity, we went from Romotion would say we had about a 3.1% global EV penetration rate in 2020, probably coming in at about 5.9 this year and 8.5% next year. And so the trajectory remains on track. The breakdown of that, U.S. was only about 750,000 units, in contrast to Europe at 2 million, China at 3. But U.S. is projected to go from 750 to 1 million, so 33% growth rate. That's pretty significant. And so last year, what we saw, if you look at specifically North America, the big announcements, the big investments were what? It was assembly plants, EV assembly plants, and EV battery plants. Now, and this is palpable where I sit. Now the discussions are on how do we do the rest of it. How do we make it so that we're making the batteries here and the cells and the CAM and the PCAM and domesticating the entire supply chain? Up until now, the OEMs haven't really been focused on that because there were just too many things. The assumption was we got a battery maker, they'll find the battery. And I'm simplifying, but not by much. And so we're in the throes of these discussions now. And so they're growing up for us. This evolution from first cobalt to Electra or cobalt plant to something more, it really is a reflection of the conversations we're having, which was Trent, your team's doing good work in cobalt sulfate. Great, we need it, but we need more. We need nickel and we need the precursor. Ultimately, if you look at Europe, look at Finland, look at China, you want to make your precursor where you're refining your materials. And refining materials involves a permitting regime that's just more complex than building a plant. You have tailings, you have water issues. And so Canada is a great place to do that. And so from our permitted site to be able to do cobalt, you have to do recycling. That just kind of comes with the ecosystem. To bring in nickel, and we're 2 hours from Sudbury, one of the biggest nickel belts in the world. So what you're going to see with us, and these are conversations that are multi-party. We're talking to nickel producers and nickel projects. We're talking to PCAM companies, ex-Chinese. There's only about 8 or 10 of them worldwide. And we're talking to the OEMs, and we're trying to put together all these sort of Lego pieces. If I were to predict how it all comes together, I think at PCAM, a precursor manufacturer partnership, joint venture or otherwise, is probably, that's the big piece, right? That's going to make everything else kind of fall together. And so a lot of discussions ongoing. It'll come, but it'll take a few more months yet.
Right. There's a lot of different processes in place and in play there. And I think for your shareholders and anyone looking at this fresh is saying, well, right, we're having to try and understand a multitude of different processes, potential revenue streams, and how these things join up. And I think you too, there's a degree of you're learning on the job a little bit with this. You are hiring the right people now, but you are kind of learning on the job about the processes. I come back to my original question, which is, how do you get the scale to this thing? Because being able to have a nice, small, perfectly formed package, which there's nothing wrong with, is great. But I'm looking for scale in terms of intent. I'm looking for scale in terms of returns. I'm looking for scale in terms of contracts that you are looking to get in place. And with OEMs, how do they start? What do they need to see you as a serious partner?
Yeah. No, it's fair. And so the cobalt, you've seen us scale up already from 5,000 to 6,500, and that was market-based decisions. What does that mean? We projected about $35 million US of EBITDA annually at 5,000. So 6,500, if you straight line that, it gets you in and around 45 million of EBITDA, roughly. We need to work through those numbers, but that's probably a pretty good ballpark. Recycling, I think we're not, unlike some of the peers in the recycling business, we're not going to go big. We're going to go modular. We're going to go small because the market's not that big today. So there's two markets there. You've got the secondary waste and then you got the battery scrap. Once the battery plants start working here in North America, we've got all the equipment. So the idea is to kind of back our way into it and do smaller modules, take 4,000 tons of black mass in and then do 10,000 and then do 15,000. We owe some numbers on that, but we've done all the technical work. I think the market metrics, that'll come to, I think, over the course of this quarter. But you're right. The other two pieces is it's more of a stretch. Nickel is big, right? I mean, if you look at 60 million to build a cobalt plant, a nickel plant's going to be, I don't know, 300, 400 million. So that's a big lift. And how that comes together, I go back to the PCAM plant. If we get a PCAM partner that's going to come in and co-locate on our massive permitted property, some of those pieces will start to fall together. So I would say the recycling is proximate. The recycling, the nickel rather, and the PCAM, we're still looking probably 3+ years away. We will be doing a battery park study. So, we'll have some numbers to share. We're talking to a partner now about a joint study. I would expect to have something on that, at least a bit of a roadmap for us in the next, call it 4 to 6 weeks.
Okay. Well, I think that's the roadmap is what I'm looking for. That's the questions I'm asking here because, you say 45 million EBITDA. I'm like, so what, right? I am, right? Yeah. But if you're saying it's a stepping stone because it establishes a process for us, it gives us the credibility to do what we want to do, and then we can easily scale from there, right? That's fine. And whether it's JV through industry partner, through strategic partner, through finance, however you intend to do that, that's fine too. So, but the roadmap kind of lays out to me. Well, will you be giving guidance over what, the next 12 months, 24, 36? What are you looking to do then?
Yeah, I think actual guidance is probably in the second half of this year, and it'll go out yeah, it may not go up much. I don't think it'll go 2 years, but we'll have to give market guide on what a roadmap looks like. But if you can get a sense at least of what an annualized EBITDA looks like, even at 5,000 tons, and then what's our peer group, right? Chemical companies what are they trading? 12, 15 times, lithium at 18 times. Then you can start to see the value and the opportunity there. So fair enough. We do owe some work. I think the construction, all these growth at the end of the day, I'll go back to what one of my technical advisors said, Mike Chalkley, 50 years of hydromet experience, largely at Share, sent me an email earlier today. He said, Happy New Year, Trent, and what will likely be the most important year of your career. And it's a pretty striking email, but he's right? Like when you're spending $5 million a month to get a company to cash flow, you got to stay laser focused on that. And the growth, while important and while it's coming together, I would say 90% of the team is focused on execution of the immediate project ahead of us.
Yeah. Okay. Laser focus is always good, wherever you are, or whatever stage you're at. But talking of which, what are you going to be? Are you going to be a chemicals company or battery, in its broader sense, battery thematic company, or because you've also got a mining asset? What do you do with that?
Yeah, I mean the valuation. Obviously, we're still got some work to do. Hopefully, this is a re-rate year, but the valuation is driven off the refinery, and I think this idea of going broader it's been well received by shareholders, by stakeholders, by the government, and so people want to see us succeed in that area. Where that leaves us with our mining asset, it's one of two choices, right? It's either this is a captive feedstock, which will capture a better margin if you can feed it into your refinery business, or this is a game left to another entity, whether it be a spin out and earn in. And it's I'll be honest, it's a live question with me. Idaho's got a fabulous resource base, but it's going to take time and it's going to take money and focus to turn Iron Creek into a mine. I do see a double there in our resource on the not too distant future. And so our focus over the past year has been de-risking and network and permits, doing all the things you need to do. The re-rate on that asset won't move as quickly as a refinery. And so where we go, I think there's lots of paths, including bulking up and trying to make that side of the business even bigger. But whether we would keep it within Electra or sort of spin it out or monetize it in some fashion, like I'm a shareholder, we're going to spend a little time looking at that over the next 12 months.
Right. Okay. So you've signed something with that Glencore. Great. What are the other conversations you're having at? Because people, again, when I spoke to Michael, he wasn't really kind of able at that point to be so clear on the numbers side of things and what was going on. He suggested there's a lot going on in the background. Now that was a couple of months ago now. So what has moved forward? Because if I'm an investor, I'm well done at Glencore. That's helpful, right? It's helpful having a partner like that who believes in your ability to produce because they've gone to the bother of signing an agreement with you. So that's useful for other discussions. But I'm keen to understand what is what are the OEMs interested in?
Yes.
I asked the question earlier. What are they looking for from you? What types of conversations do they want to be able to have with you at the point when you're able to?
Yeah. Okay, good. And let's talk. So if we try to look at that question through a different lens of catalysts, right? Timing. We have 4 phases: cobalt, then recycling, then nickel and PCAM. Hard to say which comes first, probably in tandem. But cobalt's the one in front of us. And so the OEM contracts, OEM and their battery partners, those are live. These are daily, weekly conversations, and that's probably the closest to time and the most important catalyst. I think that would support a US NASDAQ listing if we get it right, and we will. So that's huge. The recycling one, I would say we've had inbound, and to be clear, we're on the refining end of the black mass, right? We're not shredding the battery. If we let other people do that, we've had 26 parties express interest in working with us, most of those inbound around the world, a lot of them North America. So I would say that's on hold. We're going to do a demonstration plant this summer. We've got a partner, if you will, for feedstock. We're going to do a demonstration plant and demonstrate the quality of the product. And at that point, commercial discussions will resume. So we're not as focused on solidifying that supply chain until we've basically validated our technology. Nickel, still early. I think the PCAM is probably the second most important because there are, as I say, 8 to 10 or so, Michael would know this, ex-Chinese precursor manufacturers in Asia, Japan, Korea. I know of at least 3 of them that are actively looking for a jurisdiction. Like we need to set up somewhere in Canada to follow our supply chain. So to me, that's the second most important. And if we can pick that partner, that's gonna, a lot of things fall into place, because now if you got the PCAM manufacturer, you've identified the battery maker and the OEM, and you probably solve some of the supply issues around nickel, cobalt. Nickel conversation gets a lot easier as well, because those, whether it be a producer or a project, you're now, I don't want to say backfilling, but now you're filling in the last block, if you will, on the board to pull it all together.
Yeah, I mean, do you think? I mean, what are you? You're sort of 180 million market cap company, right? You come off a bit towards at the end of the year. I mean, why did you think you came off? Do you think people were a little bit excited beginning of November?
Yeah, truthfully, we raised 45 million in debt, and we've had 5 million in conversions already. The stock performed to a point where some of the note holders decided just to take their money now, and so that's a lot of shares to get absorbed in the market. So that's actually, it's a good news story. I haven't seen any of late, so that they may stop for a while. But if a year-end portfolio rebalancing on the debt side probably put a lid on us a bit. Get the OEM contract, and I think we'll see that lift come back. And so we were capped, to be clear, into November for sure.
Yeah. Like I think you nailed it on the head there, which is you get your OEM contract, and I think the kind of trigger for me was when you used the phrase backfill, because I think there's a little bit of backfill required from you guys. People got excited about the space that you've entered into, and perhaps where you're trying to position yourselves, away from mining, where it can be hit and miss. I appreciate Idaho's got a good track record, but it can be hit and miss. So when do you expect to be able to talk about OEM contracts? Are we first half, second half?
So if we were to talk on Trent's schedule, OEM contracts in Q1 is my goal, but I wouldn't maybe first half is a better way to manage expectations, just because I'm only half of that decision-making process. We are only half of that decision-making process. But OEM contracts, I think it's sooner than not. Precursor then being that second big commercial catalyst. There's a whole bunch of other catalysts. That's probably middle of the year. Now launching a battery materials park study for Canada, for North America, might help put a few things in place. But that's going to be second. Now, all along the way, of course, we're spending 5 million a month. There's a lot going on. We do have one more permit coming in, a closure plan, so people are waiting to see that come, and it will. And then it's just the erection of the building into spring, pouring of concrete, the equipment coming in from the US, the crystallizer, and sort of putting it all together. We will also have some drill results out from Iron Creek, from Idaho, as we try to grow that resource. And then, of course, in the middle of the year, we'll have the demonstration plant on recycling. So recycling, you'll start to hear a little bit more out of us from that, because that is within our control. But it has to play a little bit of a second role to the cobalt plant until we grow the team a bit more.
So tell me about positioning. Okay, you've changed the name, Electra Battery Materials. You put a lot of thought into that, no doubt. I've sat through some of those sessions; they're quite painful.
Yes,
getting consensus. But you also describe yourself as a battery materials company. But so do nickel companies, so do copper companies, so do everyone, and everyone's jumping on that kind of bandwagon. The battery being the excitable word. But in terms of positioning for you, it's going to be important that people understand exactly what you are, what the battery park is, how you make money. We talked about how you scale. How are you going to reposition yourselves? Because battery materials is too generic.
It's broad. Yeah, look, if you wanted a Western comp, think BASF or Umicore, maybe parts of Northvolt, right? You think of those kinds of companies. That's the space we're in. Right? We're a chemical company. At the end of the day, battery materials sounds good, has mass appeal, but we're a chemical processing company. So think about it. When was the last cobalt sulfate plant built? 20 years ago? So we do that in Canada. Well, guess what? We probably need one in Europe. So if you want to get ambitious, right, you start bringing in some partners. And what can Electra do to continue its evolutionary growth or organic growth? It would be to replicate this strategy in the US or perhaps into Europe. Just keep going. We see the trends. We know there's going to be a shortage of batteries. We know there's going to be a shortage of raw materials and processors. So if we stick to our knitting on the process side, the expertise, we've got an amazing team at site. But if I can lift that team, pluck them off of that site once the construction is done, and put them onto another project, we're ahead of all of our competition.
Do you still think you've got that? We certainly in where you're positioned, first mover advantage. Do you think that you're going to be on time to be able to do that in Europe? Because there's obviously a lot of people circling.
Yeah, Europe. Europe's interesting. There's a lot of work in the lithium space, and on recycling is crowded, right? So for us to go into Europe and say we're going to build a recycling plant, so what? But to build another Kokkola, right? To build another battery materials park, we put it that way, another plant where you've got your cobalt, starting with the cobalt sulfate. That might make sense. That's probably playing to our competitive strengths. And you've got to take this idea of a standalone recycling plant, absent the tie-ins to the supply chain. I don't think we bring a lot of value there. I think there's going to be there'll be tears in that space if everybody builds out the way they're projecting they're going to do.
Okay, and I'll kind of finish off here because this is really just. I'm excited about what you say about laying out a roadmap. Okay, I think that's important, but I'm looking for maybe a sense of the economics now, because you've gone to the bother of increasing the nameplate from 5,000 to 6,500 tons. One suspects that comes with some sort of improved economics, right? So again, when do you give us guidance on the kind of ramp up from when the plant does start actually generating revenue? Yeah,
we're looking at that as we speak. I mean, we're sort of going through our budgeting process now on the capex. On the opex, when you look at that ramp up from 5,000 to 6,500. As I say, this is really customer driven interest that we're playing into. A lot of our costs are variable. It's reagents that's driving the unit costs, and so that linear increase of EBITDA from 35 to 45 is probably about right. Are there some synergies? Sure, but I'd rather probably keep that in my back pocket and just speak instead of some simple numbers until I get some confidence. The reality is with a plant like this, you don't really know until you're operating, right? And so best to be a little bit conservative until you can get things out of the gate. We've got a world-class team, Metso, Autotech, and Hatch, our own PhDs and process experts, but we've got a long road ahead. But I take your point, Matthew, that ultimately we're going to have to give maybe some more concrete guidance as the year progresses if people want to truly wrap their head around what evaluation means. And not quite there, but we'll certainly take that away.
Okay, and the reason I say the thing that's important is because it's really hard for people to do a peer analysis for you if you're moving into the chemicals space, right? Because most of those are private, and it's hard to kind of get to do a peer-to-peer analysis. And without, you're at the beginning of a process. So without actually understanding where this thing potential goes to and what margins potentially could be, and God knows who you're going to actually contract with. They could be private companies, in which case the information is never going to come to market. You're going to have to lead, right? Because if you expect your brokers to be able to do the work for you, they're going to struggle with that access to all that information, and certainly retail investors are going to find it even harder to do that. And then, in terms of, are you fairly valued? Do you need to backfill valuation? Are you undervalued? It's hard for us to know. So that's why I ask if that's a thought.
Yeah, well, I suppose that's part of the maturation of growing up in this company, right? It's going from the arm waving of we're going to supply 1.5 million EVs, which is the target, to what does it all mean, right? We're going from dream to reality here, and we'll need to get you more. I can't do it today, but maybe by the time we have our next call, I'll be in a better position to give you some concrete numbers or
Trent,
firmer numbers.
Thanks. Look, I just want to say, great catch up to you. Great year last year. Like I said, you started putting all the pieces together. I want to see, I want to be able to look and see you continue to do that. I think it's starting with the hirings that you're making. So look forward to seeing a bit more of that, and obviously, keep us up to date with how things are going operationally. Okay.
All right. Will do. Thanks, Matt. All the best in the new year.